That. Okay. So honestly, I'm gonna delete everything I have on the screen because this is like crazy, and I'll just like start fresh for y'all so I could just show y'all. Uh, oh my gosh, I should have just done this while I was talking to you. All right, that's good enough. Okay, so coming into New York, right? Oh shit, hold on. I kind of hear myself from someone's mic.
Lil.
Yeah, I think Khalil, yo, can you
All right, hold on.
bro, I hate hearing my voice. Oh my god. Oh my god. That's it, whatever you did, it made it worse, bro. Wait, hello?
Right now.
Hello. All right, I think we're good. Okay. So, coming into New York, should I like go in replay mode or just like fuck it? Just
Whatever you want to do.
whatever. Okay, so this is New York Open right here, right? So before New York starts. Yo, Clay, I'm not gonna just mute your mic.
Okay.
Yes, I can't hear myself, bro. All right. So before New York started, obviously we're in like clear downtrend. Just like overall, just sinking, right? Respecting just like order block on order block. I usually am on the 15-minute time frame when I first start looking at the charts. So we had like this big 4 hour untapped gap at the time, but I was just so bearish. Like I still am bearish, and I'll show you guys like a little bit of what I'm looking at to start the week out too. I have like a few decent levels, but anyways, so we're just like we keep respect. So Asia, we literally respected this 15-minute OB right here, sunk, broke structure, came back up here in London, respected this 15-minute OB up here, sunk, broke structure again, swept London, swept all these lows, honestly, and we just keep going down, right? So we just keep respecting higher time frame order blocks. So coming into New York, so I like to mark out 5-minute and 15-minute order blocks. So let's just say like I marked out this. So you guys understand order blocks, how to mark them out, what they are, right?
Yeah.
So basically it's like if we're marking order blocks to the downside, we mark the last like up candle that started the move down, right? So this would be like a huge ass 15-minute order block. So same here. This was the last up candle in Asia, this tiny one right here. That ended up tagging for us to drop in Asia, and then we had like this accumulation here, but we ended up dropping. And I'll show you some good stuff in Asia too that happened back then. But yeah, so we had this huge 15-minute order block. We keep respecting and we keep dropping and making new lows and new lows and new lows, and we're not breaking any highs. So coming into New York now, I'm gonna go on the 5-minute. So one thing that you could have caught along on New York before this short, and I'll show you how. So first of all, so how I look at order blocks and break of structures before I get into it is so I basically go off protected highs and protected lows. So right here, this low right here, this low swept this major liquidity here, right? So we came here. Oh, oops. Let me do the ray. So we came here and we swept this low out here, liquidity, right? And we started this low. So the only way that this low, this order block right here would end up being protected is if after we swept this, we came and we broke a structural high, right? So, so that's where I start marking out breaks of structures. So if this high didn't get taken, right? And let's say we just came up here and then we kept coming back down. This low would not have been protected, and this would, instead of liquidity, this would have been just more break of structure to the downside, and we would have kept sweeping this low. But since we swept this external low and broke out of this high, that makes this low now protected. Okay. So what we could see here is we did that again coming into London, right? So we made this low, sweeping out these lows, these two internal lows. We kept holding on to this low and we broke structure again, right? So so what I know now is that when we're up here, right? When we come back down for this order block here now, this would be the new order block, the new low that's protected. When we come back down to here, we are going to have a reaction here until we come and sweep another high. Like this low is protected now because we came back down, held this low, swept some internal lows here. Like this is liquidity too, right? We swept this little liquidity here. And then we broke a high, making this protected low. So why is this all important? Because coming into New York, what do? So pre-market, so if you mark this low order block right here, pre-market, we dove straight down and tagged this immediately, right? And this could have been your first long, literally right at open. And literally just what I like to do is I literally just mark out just the top of the order block to the bottom, just like that, of the 5 minute. You could also do 3 minute depending on how big it is, because you're gonna notice a lot of the time, like if order blocks are like 50 points or something, like your 5 minute order block is like a 50 point thing, then you want to scale down to 3 minute. And then if the 3 minutes too big, you want to scale down to like the 1 minute order blocks. So it just depends on the size, but even 3 minute works here. We tapped into the high or just literally we tapped right into the order block, stops below. And what do we target? We target the high, because like we know for a fact now that this high needs to get taken, because if this low is protected, for us to start coming back down, we need to sweep some sort of liquidity. So this would have been just just for the freest 100-point long right off open. And then that's when I would mark this out as liquidity. Okay. Now that's like just like a smaller like internal long that could have been taken. Overall though, what are we doing here? So we marked out this 15-minute order block, right? So 15-minute OB on the higher time frame. And what are we doing here on this 15-minute? We were bouncing out of it, right? So we swept this liquidity, this internal high, and bounced out of this order block coming down. Why I said I didn't catch this trade is because I'm not going to do this, right? I'm not doing that.
Right.
Okay. So I'm just looking at this as an overall bias of, okay, we are coming down for New York. Now I'm going to find my trades inside somewhere in here in this structure that's going to form, right? So I could tell that we swept liquidity and we're coming down, and we broke structure. So bearish like we're 100% bearish now coming into New York after we broke this low and we broke London. We swept London, right? Bearish. This high is now decently protected for now since we broke this low, but we came up, made another high here. So like this is more liquidity swept right here. Another high, and then we came down, broke this low, another break of structure here, and just like little just market structure things going on, right? So we keep going down, and then 10 a.m. starts. So this is where I start finding my trades. So basically 10 a.m. opens, we come up, I mark out I believe I marked out the 5 minute order block here? It's 2. Yeah. I had this one marked. So I had this whole 5 minute marked right here. And then I come back down to my 1 minute. So I have this 5 minute order block marked out and we're respecting it. And why is this order block valid? Because we swept internal liquidity, came down, broke structure to the downside. So this internal like high right here is protected, right? So coming in at 10 a.m., we bounce up, make the move, tap into this 5 minute order block here, come down, sweep, right? So this sweep right here, a lot of people would think this is liquidity, right, to start coming up. So they would try to find longs here, or like after this retrace, they try to find longs. But like I said, bro, like this is all just more breaks of structure, not liquidity to the downside. So when this high now that was made is now also protected because again, more liquidity sweeps, more breaks of structure to the downside, bouncing out of higher time frame order blocks, right? So this was my first trade, was literally just 1 minute OB because I know this high is protected. I just went like this, went like that. I think actually I did it on the 3 minute time frame, I'm pretty sure. Yeah. So on the 3 minute time frame, you see how this is all discretion here, but you see how this wick is like huge here. So I literally just went for the body to the wick here, and I went 30 points like this, but I actually had my stops around 19 points. And again, this is just more like market discretion and understanding, but like this high that we swept here, this liquidity, this is good enough for me to have my stop right here because it's above the CE of this 3 minute. And there's
no reason to sweep that.
There's no reason to even come up to this area right here, right? Like if we come and tap the CE for whatever reason, it doesn't even make sense because then we'd be sweeping this little 1 minute high, and it just doesn't make sense because if we're like still extremely bullish, we want to keep pushing down, right? So so first short right here, absolute banger. Why is this low not protected here? Why could we target this low? Because this wasn't a liquidity sweep. This was a break of structure. So we need to keep breaking structure, and eventually this low now is protected because we end up coming up and breaking all structure up here after sweeping these two. So now eventually this will be a liquidity sweep, but I'm gonna just show you guys a few things. So before all this, I also do standard deviation. So this leg right here, this manipulation that swept this liquidity here, this is AMD, right? So we accumulated, manipulated, swept this out right here, and then came down and distributed. So this is a beautiful deviation leg to start off with. Obviously targeting -2 right here. I always target -2s for my TPs. So that's one deviation, and then this deviation also lined up. So same concept right here. See, we chopped, came up, swept this liquidity, started coming down. So this little leg right here, this 1 minute, also is valid. And as you can see, both these -2s lined up right here, like to the tick. So just like the freest short ever, just to start off. Now we could start looking for longs, and I'll show you a couple longs that we could have taken. So again, and like I know I'm doing this quickly, but like if you guys start understanding like concepts, like if you guys can figure out which lows are protected, which highs are protected, like, and then you base your entries off order blocks, I'm telling you, like, free. It's so free. So okay, so now
right. You just have to know the narrative.
Yeah, know the higher time frame narrative, know what we're bouncing out of, and you can catch huge moves. So now let's look at this. So after we come and sweep these two lows here, right? This still could technically be break of structure. I'm not sure yet, so you have to wait, right? So for now, this is still another break of structure here. When we come up and we sweep both these two highs now aggressively like this, we are finally breaking structure to the upside, switching this to liquidity now, and starting to look for longs now. Okay, do you guys see how that works?
Yep.
So we swept these two lows, broke up. Unlike over here, when we swept this low, we didn't break up and take the high. So yep, this way we came, swept this low, liquidity came up, broke structure to the high. Now we can mark our deviations to what to target, and we can mark out OTE of this leg right here. And I'll show you guys a little bit of sauce right here. So after we break this structure and we sweep this liquidity, we're like a lot of people think we have to come back down to like 0.705, 0.79, 0.86. So we have to come this low, right? But that wouldn't make sense because this little structure right here, right? This structure right here, this should not get broken if we are already pushing up. We've broken this structure right here, right? This is our structure that we should be looking at for a bounce. We don't need us coming back down and tapping this, especially because we already tapped into this 1 minute gap too. I don't really use gaps like that, but like on the 1 minute or whatever time frame. But I mean, just like for like whatever purposes, we did tag into this. It's filled. Like we don't need anything in this area. So again, what I like to do is I mark this whole thing out. As long as we come past the 0.5, any order block past the 0.5 is now valid, right? So if I'm looking for longs, I'm gonna go personally on the 3 minute or the 5 minute. So let's say I start with the 5 minute, right? Where are we? So 5 minute, there's no order block here, right? So I'll scale down to the 3 minute, and then boom, we have an order block right here. So, and it's right under the 0.5. So literally all I do is bang bang, go into the 1 minute like this, and right under the 0.5, we have this whole area right here, and just limit. You can probably put your stops. I mean, again, discretion on where you want to put your stops. Most likely under the CE. Again, this strat is like there's a like bigger stops, but you're going for a lot of R, right?
Right.
Targeting the rest of this distribution up, so it's valid. I honestly don't even care how big my stops are if I'm this sure about trades and where the market's moving. But honestly, under the CEs and protected lows, like this little 1 minute right here, this shouldn't get tapped into. Pretty valid. But most of the time, if price, like most of the time, after we break structure and we sweep liquidity, price should be just tapping into your order blocks and just going. If it starts coming down here, your trade's probably cooked. So as you could see, like all these order blocks, we tapped and we went. We didn't even come for the CE of any of them. We just tap, go, tap, go, tap, go. So again, if you guys want more, what's the word? If you guys want to, instead of limit, you guys want to like
more confirmation.
More confirmation. You could go on the 30-second time frame. I'm pretty sure there was probably a 30-second gap right here. I don't have the 30-second on TradingView because I'm broke, but 30-second gap right here somewhere. Or this 1 minute displacement candle. It's huge, but it's a 1 minute CISD displacement candle up right off of this. So you could have done this, but this probably would have been a even bigger stop than the order block. So I mean. But yeah.
But usually with the order blocks too, sorry to cut you off.
No, you're good.
That shouldn't come below like the top of the order block, like that, the bearish candle before the engulfing bullish candle.
Exactly.
Normally, if it will tap, it'll tap the top of it and then go.
Exactly, and you could do stuff like this too. You could go off the body with the wick, and you could do something like this. The only reason that I most of the time try to catch it with the wick too, over here I didn't, because on the 3 minute the wick was so big, it just made sense. And like the wick here is, I don't know, that type of stuff is more discretion, to be honest, whether you want to limit bodies or just the whole block itself. I don't like to deal with FOMO and all that, so I usually just end up doing the whole candle, especially if it's the 1 minute. If we're talking about 15 minutes though, like very higher time frame candles, then it's different. Then I usually do like the bodies, because they're just way bigger candles. But yeah, so again, another easy long here. Take it back up to the minus 4.5 off of this distribution leg, max expansion. Why could we target that? Because we've already passed the 2s, and we're bouncing out of the 3s, and since we're bullish, the only thing left is the 4s. So I mean, it's just max expansion. It's pretty simple. And then obviously, if you guys were extremely bullish for whatever reason, I guess you could have also targeted New York high. I would not have, just in case we come sweep this out right here and turn this into liquidity and respect this, right?
Yeah.
Tap into this order block to turn this into liquidity and then start coming down fast for this low. So I wouldn't have targeted the high per se, because we still have an order block here and we still have liquidity here to keep dumping if we were. But for whatever reason, you were extremely bullish, I guess you could have just targeted that. That's another long. Let's see. Lunch happened. We came here, swept major liquidity external because it's, the New York high. So let's mark this out. Swept this liquidity. Bang, bang. Came down, broke structure internally. I usually do like us coming and breaking like this, which we didn't do. All right, but this is good enough for me right here. When we break this low right here, break structure. When we break this low right here, this is also the first AMD setup, so I'll show you guys that. So over here, we start chopping, accumulating over here. I don't want to trade any of this. So we got out of our long around this candle, 11:15, and then it just started instantly chopping. You do not want to be trading chop. I see like a lot of people in this Discord, they start saying like they were trying to trade this in Asia. This PA right here, you always want to avoid this. When you start like understanding AMD cycles, you start understanding when you just don't want to be trading the accumulation. You want to wait for a break out of it and then trade the retrace. So over here, obviously accumulation. This is starting to get hectic, but. Okay, so we accumulation, manipulated up, swept external high, came down, finally broke internal structure right here. So in my opinion, we could start heading down now. And also we tapped into the big 15-minute OB that we had from the beginning, and we instantly came out of it again. So, I mean, in my opinion, we're still bearish, right? We're still respecting all higher time frame bearish PD arrays. So coming into the this short right here, I'm going to my 5-minute first. What do I see here is the this order block right here. Obviously this is pretty big. How big is this? Yeah, okay, this is like 37 points. So I just mark the body with that, with the wick, come back up here, and we have our 0.5 literally right above that. And after we break this structure, we have no real reason. I mean, this 1 minute gap here, I guess, could get tapped into too. But that's like the furthest it should go. It really should not come back up here. So technically, like, people who would like try to hop in off the 1 minute order block would have gotten edged like crazy. But again, like, if we're just displacing lower like super fast, I'd just like to just go off the 3 minute and 5 minute OBs if I see them. So something like this would have been like a beautiful trade because you're covering the CE, you're covering the 0.79, 0.705, you're just covering everything, and boom, 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 and then it's right past the 0.5. So see how we don't need to come and start taking a short right off this, but this gives us all the information we need because sweep liquidity, break internal structure, 5-minute order block formed, bang, bang, we're coming out of this. Like the market is telling you exactly what it's going to do. AMD, right? Accumulation, manipulation, distribution. Like a market's going to tell you everything. And if like these are all like little things that like I could see these like happening in real time, like really quickly. At first, you're probably not going to, because it's not like, you know, a strat that you're familiar with maybe, or I don't know, maybe you will or whatever. But eventually when you start seeing this, like this is just exactly how market structure works, and you could just catch just so much, just like it's just so much information with these little moves, like this little internal break, this big external liquidity sweep, all this. So okay, so let's say we enter this trade here. What are we targeting? So I don't even need standard deviation. I just would easily just come and target these lows right here, because this is accumulation lows, right? So you always just want to target those first. So I would just boom, boom, and that's just like another easy short trade there at lunchtime. But you could also go like this, and I would probably do this deviation from this leg, because this leg is going all the way down here and it's weird. So I would just do the distribution leg here. And yeah, it looks good because it's bouncing off different areas. But yeah, so you could, I guess, go for like -2 or whatever, and it eventually will play. But being safe, just target accumulation lows on the opposite side, because that'll always it'll always plan out. So that's another short. And then another short you could have taken is off this bigger leg here. So you could OTE this, and then the 0.5 right here, and we're still respecting bearish structure. We sweeped all of this, came back up, broke this. So again, break of structure, internal sweep of liquidity, come up here, order block. We don't have a 5-minute. Let's go to the 3-minute. 3-minute, bang. Okay. 3-minute order block, boom, boom. And second short. And then this one you could take to the 2s now. So bang, -2, bang. So just another short, same type of strategy, right past the 0.5, 3-minute order block, boom. And yeah, and then I'll show you guys a little bit of what I'm looking at for coming into market open. So let me just delete this, and then I'll just answer whatever questions you guys have after. But so we swept this major liquidity here. We swept this New York low coming down, and then we came up, and this was AMD right here, accumulation highs. So we came and targeted the accumulation highs, and we actually did like low-key sweep them. Not a sweep that I really like, but technically this could be a break of structure here. But let me see. So this high right here looks pretty valid too right now for this 3-minute. I think I was looking at something here. But all right, so first, so we broke this, and then we broke this structure. So technically this low should hold at the moment. I don't like how we broke this, so I would be careful about taking longs because we could come for another resweep. But what I was looking at was I drew the OTE right here, same type of concept, and then 3-minute, and then I see this 3-minute order block right here. So this was a short that I'm looking at coming into next week. So more breaks of structure. this first presented order block should be protected because this high came and swept this low. So this was a break of structure here. So this order block should be protected here. And this is the first presented order block after the 0.5, right? You guys see that? First 3 minute presented. So this would be a valid short in my opinion. Only thing is that we have completed the cycle already of the -4s. So the short would probably not be to the lows. Let me see. So since we have already went past these -4s, we actually haven't went past to the -4.5 yet. So that's why I think this low might not hold. We might come for the sweep and then start coming up. So you might be able to find some longs eventually. But this short should play for at least coming into one of a protected low that will eventually be here. So you could probably take this for, I don't know, probably like a good 100 points or something. Like it, but it'll eventually bounce out of this area. But this is a decent short here. But that's just what I'm looking at coming into this. And then also with weekly candles, how they go, they usually open low or open high and then close the other way. So like over here, we're in like extreme discount. So the weekly candle is probably going to come down here, open low, and then we'll probably have a gap, and then we'll start making our way back up most likely. And eventually we're probably coming for the untapped 4-hour gap up here. So we're eventually just going to come here, I'm assuming. So we're probably going to end up, and all this like higher time frame, like if you look at the 15-minute, this is low-key all was just like this accumulated cycle right here. This is all just straight accumulation here. And then we manipulate it down. So I think we are, and we have an untapped 4-hour. So I think we could definitely start working our way back up. And on the way back up, you're going to find a lot of break of structure, liquidity sweep setups with order blocks, and you could just start your long, like taking different longs all the way back up. But yeah, let me know what questions y'all got, because I probably said like a bunch of random shit, and yeah.
That's sick.
So you guys understand like anything of what I was saying?
No, yeah, for the most part, yeah.
You guys have any questions
So, like,
about how to spot break of structures, how to spot the protected lows, how to spot the liquidity, what's the difference, stuff like that?
So your order
blocks.
Whoa, holy echo. Oh, Lil, you want to say something?
All right, you go first.
So it doesn't really matter what time frame, like of the order blocks that you take, but it's normally what, 3, 5, or 15 first, and then 5, and then 3.
So 15 minutes, yeah, for like the higher time frame ones, but obviously those are not entry order blocks. Those are order blocks for like areas that will bounce, and then you find your entries off the smaller order blocks because you don't want that much drawdown. So usually I like to use the 5 and the 3s, but if the 5 and the 3s that day are like 70, 80 points for whatever reason, then I'm scaling down to the 1 minute order blocks and just stuff like that. More discretion.
Gotcha.
Yeah.
And it's the first order block you see.
First
You just have to scale down time frame.
Yeah.
But yeah, first presented out of a protected higher low.
Yeah, out of a protected higher low, usually past the 0.5.
Right. Okay.
Exactly. And I could even show you over here in this session right here. So
does it work in Asia too?
Yeah.
If it's not like accumulating or whatever.
Yep.
Asia's moving.
I'll show you Asia right now. So Asia, let me actually show you the short here. So over here, We, let me see. So came up, came down. Let me see, because I caught this long right here in Asia off this 1 minute order block, and then back up into this order block right here into the gap fill, and then I was like short bias afterwards. And this was actually, I think literally right. Yeah, 0.5 order block tap, and then go to gap fill. You guys remember this when we opened up pre-market and we had a little gap on Thursday? Yeah, so just like first presented, the 3 and the 5 minute didn't have any order blocks, but 1 minute did, and it was right below that 0.5. But yeah, let me show you. So in Asia, I didn't really catch these shorts down here to Asia. I was actually trying to long after this too, so little bit of a wrong bias I had, but basically coming into London, I had a really good setup. So again, Asia, we chopped over here, and whenever you see chop like this, eventually you're gonna these are gonna be targets. So this chop right here at the time got swept by this rejection wick. So this chop is already gone, but all these highs right here are mostly valid to come for and sweep. So once we broke out of this, came down and we swept PM lows, we actually respected the New York order block that came, right? That was made. We respected New York's order block. And you could technically have taken a premature long off this sweep with this order block holding, because again, so we come down for New York, we come up, we can't take this order block yet down here because we haven't broken structure here yet, but eventually we came and we broke structure. So after we broke this structure and we have this liquidity down here, this low is now protected. This low is not protected yet. So because it hasn't swept anything, it's respected something but hasn't swept. So when we come down here for Asia and we get this tag here, you could pre-fire this long off this order block targeting these highs, but I wanted more confirmation, so I waited for us to sweep this low here, come up, and then break structure again, which we did. And then I took this order block right here, because I know this is definitely a protected low now, because we swept PM lows, and we came up, broke internal structure, and bang, bang. And then this was the long I was talking about with Glenn the other day. And I just marked my deviations like this, and I wanted to target the untapped 4 hour like a dumbass, so I just had my TP over here overnight, and I ended up getting trailed out. I'll show you guys where, but I wanted to target the 4 hour, and then I had a limit at the Asia highs too. Right here I had a trail limit like TP1, but realistically I should have just targeted these accumulation highs right here, because this was like, you always just want to target the accumulation highs, especially when we're in a downtrend. Like it might not fully reverse up yet. You might need more confirmation for that, but this was already 200 points here, just targeting the highs. So valid long here, and then I got trailed out. What I did was once we made this 3 minute OB here and we kept pumping, this was like my signal to just trail here. So I just trailed here, and then I got stopped out before we pumped. Oh wait, no. After we came down here and then came back up here, I trailed to this OB here, and then it tagged here, edged my TP1, which was here, and then ended up obviously stopping me out over here. But because this order block is valid, This low is valid when it comes up and sweeps this. That's how you want to trail, by the way, like on 1 minute time frames too. Whenever you're in a trade, let me see if I can find an example. So like, let's say you're in a short here. Let's say you're in this short, and you're targeting this low. Oh, this is actually a horrible example because this high should have been protected here, because so that this would have been cooked. But basically, when this high gets swept here, and then we come down and we sweep this low, this high technically should be protected now. So this is when you could just trail here and you could just keep it going. But obviously sometimes the market just does its own thing too. But yeah, same thing. Like, it's just like whenever you spot accumulation cycles, just know that we're going to go one way, tap into some type of order block somewhere, and start breaking structure back into the highs, and you could just target the AMD cycles basically. Same thing here. I think this is, literally the same thing happened here actually right before we closed. So we swept this liquidity, came down, made this low, and then came up and we broke this structure here, right? Broke this. Bang. Swept that liquidity. So this low is valid now, this order block. Bang, bang. Do that. Boom. 1 minute. And you just take the long like this, and you target the AMD cycle right here. So you target these highs, and that was like the last thing that happened, the last play that happened during market close. But you'll always see these, like you'll always see it, and the confirmation is the break of structures, the liquidity sweeps. Those are the confirmations, and then you just have to limit the order blocks when they come down. And sometimes order blocks are nice, they're like only 10-point stops. Sometimes they're like 30 points, and then you'll know what to target because the accumulations. It's a little bit of a like harder strat for beginners to learn and stuff, but this is just all market structure in general. Like this is it's a lot more of like a deeper type of thinking of the market, because you're looking at all these smaller moves, and also you have to take into account higher time frame bias and just a bunch of other stuff. And then if you add in standard deviation and all this stuff, it takes a lot of practice to learn all this. It is obviously easier to just find rejection blocks like this. So boom, look at this. This was beautiful right here. We had this 5-minute RB that came up, CISD like this, boom, CISD, bang, bang. Holy shit, did we edge this? I thought we tapped the CE of this when we came down before. But it's easier to find rejection blocks like this, limit CE, and then just keep going down. But that's not like that's just entry triggers, right? So finding rejection blocks and marking CEs and 1 minute CICs, they're just entry triggers on lower time frames for moves that are usually 40 to 50 points. But if you want bigger moves, you need to think a lot deeper into the market, because you are trying to figure out exactly where the market's trying to go on a bigger scale. So obviously you got to look at the little moves like the breaker structures and the liquidity sweeps, and then you got to look at the higher time frame moves and what order blocks are bouncing off of and stuff like that. But if you guys could learn like everything that I just showed y'all with like if you guys could figure out protected lows and highs confidently, you guys are going to just print, because you could just confidently limit order blocks and know for a fact exactly where it's going to go, and know for a fact that it's not going to run through your stops.
Right.
Yeah. So let me know though, guys.
Yeah, I understand pretty much everything. It's just like a lot of analysis, which is fine, but it's just harder for me. Like I would have to use it during Asia mostly, or if I wake up like in the morning and something's setting up like pre-market,
Yeah.
or from like Asia that I can like clearly see, then I could, limit or whatever.
Mm-hmm.
Um,
Well, here's the thing. So I just like kind of went on a rant, and it's kind of like I just it seems like a lot, and like a lot of time put into analyzing where it's gonna go. But to be honest, like after doing this for so long, I wake up like 10 minutes before New York open and find exactly the order blocks and find everything in like 10 minutes and just know exactly where price is going to go and know where I'm going to go. Literally the only day that I got cooked was this day, was Thursday. This was so confusing to me because we weren't tapping into any of this order blocks right here. I got fried on my limit right here. I tried limiting this rejection block, and then it kind of price just didn't do anything this day structurally, so I kind of got cooked Thursday. But literally every other day this week, Monday, Tuesday, Wednesday, and Friday, it was just straight like market structure. Just wanted to do exactly like it's just all so obvious. Honestly, this whole month was pretty free. But yeah, that's like basically my strat. That's literally all I do. I just find liquidity sweeps, breaker structures, and order blocks and AMD cycles. It's yeah, pretty simple when you get the hang of it. And then just find higher time frame targets. Like this 4 hour gap, literally untapped right now. So we will eventually come and tap this, and that's what I'm thinking is gonna happen. We also did come down and tap into this structure finally right here, this little structure here that we're kind of bouncing off of. So this might be what eventually helps us move up and come tap into this little 4 hour gap here. But overall, we're still bearish because this was the daily gap. Tapped into it, instantly dumped. So when we come back up and tap into this 4 hour, I'm still gonna be looking probably for shorts again after we come for this 4 hour. But I'm bullish until then. So until then, we probably have like a good 500, almost 600 points of longs that you could probably find and take back up here next week before you start looking for shorts again. And then the only way you'll really know if we're fully back in bullish structure, honestly, and I know this is a lot, but probably when we come and break these highs again, which is it's like 1,000 points away. So we are currently still gonna just be bearish for a while, but yeah, that's how I be trading, boys. Pretty much.
Sick.
Yeah.
How long have you been trading?
I've only been trading since December.
Dude, good for you, bro.
Yeah, I don't know. I just kind of got the hang of it pretty quickly and found out what works for me. And a lot of the market kind of just does the same shit for the most part. You just got to figure it out.
Yeah.
Yep. And then, oh yeah, one more thing. So again, shorts here are valid, and then buys here are valid, and you got to understand that from how we're like respecting highs and disrespecting highs. So Asia, when we came and tapped through this gap, Asia, like your bias should have been shorts here. But then when we came and swept this, your bias could now be longs to the chop. But you just kind of got to see it. It's just structure. It's literally just structure. Like you just got to look at how like this. It's like building, bro. It's like construction workers. Like everything is just straight structure, and we're going through, in and out, past it. All of this. It's literally just like a house. Like this whole shit is like a house, and you just gotta find out where we're bouncing, where we're going, type shit. Yeah. Type sheet. Khalil, did you want to ask something?
Am I still echoing?
Nah, you're good, bro. If I don't talk, you're good. So
when you're looking at breaker structure, do you just look at wicks, or like if it wicks past it, or do you wait for like a close above it? Because some people look for either one.
I look for wicks past it, but for the most part, I think all of these were like decent, like bodies past, bodies past, bodies past, bodies past. Because that just gives it more confidence. Like that's why actually I said over here, when we broke this structure with this wick, it's not really a confident break of structure because it kind of technically made like relative equal highs here. So that's why I said like watch out for this low to get swept. So technically, I guess if you want to be more confident, yeah, you want things to go through it like this, like right here, this wick right here. We went through it with a few like two decently sized bodied candles and then came down. But it, like again, this is all discretion. So it's you gotta just have experience in the market and just really feel and understand when things are looking right and when things are looking a little sus. Like right here, things are looking a little sus, you know?
Yeah, like that. I would look at that as relative equal highs. That's liquidity right there that I would want us to come down, probably sweep those lows,
Exactly.
and then, yeah.
Exactly. And that's where discretion comes in. So, yep. Which this strat is a lot of discretion, obviously. It's just a lot of experience and discretion. And I think Glenn trades a lot of what I'm saying just on lower time frames, and he does it a little differently. Because I know that he trades the like right after, like he marks a leg out like this on a lower time frame scale in like a big area of interest. So you know how Glenn like sends out like 1 billion levels. So when those levels come in and when they get tagged, he basically goes on like the 30-second, 15-second time frame, and he marks out OTE with 0.5 in it. He doesn't do these levels. He does like 0.25, 0.5, and 0.75. And he just wants it to come past 0.5 and tap into like a 15 or 30-second order block or something like that. So, or like a gap or anything like that in like a really lower time frame. But same type of concept. Just like he just does it in big AOIs with a much lower time frame. But still same shit with market structure and stuff like that. But yeah, this will be a valid short, by the way, when we get there. This one, this 3 minute, this looks good to me. So whenever we get there, good luck, boys.
W trade review.
Huh?
That's a W trade review.
W, right?
Yeah.
Yeah, it's just sauce.
Mm-hmm.
Sauce for sure.
Glenn, was I saying like everything pretty decently? Like I don't know.
No, everything's solid. I like how you explain everything.
Yeah, because I'm basically doing everything that you do, Glenn, just on a higher time frame, right?
Yeah.
Exactly. So it's like kind of just makes sense. Yeah.
So the whole point for your strat, Glenn, is basically just like better or like lower risk.
Yeah. I try to do
Find your stops.
lower risk entries. I try to do like 5 point stops, but lately I haven't, bro, because I've been trading on the phone, so it's a little bit
Yeah.
harder.
Yeah,
But
that's how I do stuff.
recently I've been like lowering my size just